Perfect. Okay, welcome. Welcome on this Sunday on Bretton's Sunday's commodities session. My name is Kenny Simon. Welcome to the ones who know me, of course. Welcome and happy Sunday to you guys. Hope you guys are having a safe and good weekend so far, the ending of it, and then a new week ahead. I'm wishing you guys for tomorrow onwards. So with that, we usually speak about oil in this session. So mainly Brent and US oil, of course, sometimes occasionally, depending on the market as well, when there are news on US shale oil conditions, from time to time, there are some political conditions that would encourage us to understand a little bit more about how shale oil impacts the rest of the market as well. But it comes occasionally. But this time around, we are impacted by a lot of geopolitics, economics as well, but predominantly the current coronavirus, global coronavirus with the Delta variant, various others, are actually impacting the price of commodities as a whole, mainly with logistics as well, with import-export routes and costing as well with oil and gas production, even drilling and everything else. So it's a big ripple effect caused by coronavirus, but then with that as well, there's a lot of policy changes with regards to interest rates decisions, banks, commercial feds, the central banks, as well as yield returns and various other things. So because we are paying a lot of attention to the yellow metal, they call it, which is gold in particular. Of course, other precious metal as well we will be discussing, but depending on the timing, usually there are timings for the other precious metal. And with gold, it is directly related or correlated, whether negatively or positively, it doesn't matter because they are correlated, meaning it could be positively correlated, negatively correlated, but it can actually change as well to the US policy, current economic condition, but mainly the current US policies with regards to interest rates. This is number one that gold has its connection to. And number two is its old US Treasury yield situation that basically governs the entire economic mechanics of US, and that all has correlation to gold. And whether it's positively correlated, negatively correlated, it interchanges from time to time, but we just need to know that it is correlated, and then we can actually make our decisions in predicting trends and our trading decisions accordingly as well. So let's get going into this. Just before we go into the chart, perhaps it's probably best to look into a couple of other news that I've bumped into as well, and just so that we are aware of what has been left in the weekend, over the weekend, as well as of market closed on Friday, so that we get a bit of an idea what is to expect in terms of movements the past 24 hours and all that might actually impact movements from tomorrow onwards when market opens, especially in the Asian opens. So here we have got gold, as you can see right here, and together with this news about gold, it's talking about USD, as you can see, and treasury yields. And then next to it, you can actually see that euro has actually fallen quite a lot, and further weakness on euro. So that basically gives us the whole idea of how the USD as well as the US situation will actually pick up positively. Now, whether or not it is because of real positive reasons or not, that does not matter anymore, because usually that's why it's called geopolitics as well, and there's a lot of politics involved. So with that, they are usually maneuvering and manipulating a lot of things in the market, in the global markets, for their benefit, basically. So that is not really important for us. For us is what they do amongst the big boys would actually then be pushing up the USD, or pulling it down. So and that is got to do with what they have actually planned. Okay, so there's a lot to do with treasury yields, of course, current global, as I've mentioned, the COVID situation, but because of the mechanics change, a very, very big mechanics change of policies and everything else, interest rate, everything else got to do with the Federal Reserve, the commercial central banks all around the world as well. That's why we have got a lot of ripple effect in all the countries as well, you see. So that has got to do with the current euro zone as well, because you know they are all trading partners as well, so everything is interconnected. So whatever that happens in the States as being the super economy number one, and not only super economy number one, it's got a lot of weight in terms of the US dollar itself, and the US dollar is correlated to all the other mechanics. And when it comes to oil trading, oil physical barrels and all that, almost 90% it's actually done in US dollar, and a lot of other transactions as well. If you think about all the stocks, local stocks doing hedging in Singapore, Malaysia, Bursa, Saham, everywhere, KLSE and everything, if they were to do any sort of transaction overseas, you know, with companies and everything else, it has to be in US dollar as well, especially because we've got heavy traders in stocks trading the Wall Street. So with that, it's US dollar again, and it's US policies involved, US situation involved. So it's all correlated and interconnected anyway. So with that deeper analysis, we can have our reading time in the weekend and stuff like that. But most importantly is to know that they are correlated. And I do constant research on that side of it so that we can then marry that fundamental, we call it fundamental analysis, when it's got to do with anything that's out of the chart, actually. Now, no matter what type of analysis, it could be sentiment analysis, we call it intermarket analysis, we correlate it commodities and agricultural as well, various other ways of doing things. Then we marry that up with price action onto the charts, okay? So here, for example, if I click onto the gold price, article right here, which has connection with treasury yield, you can see it straight away says gold fundamental backdrop. You see, so it's no coincidental that gold has got a lot of weight from fundamental factors. Okay, so technical is just a window to confirm, it's not a window to enter the market. Actually, technical analysis is just a window, as though you have that windshield in front of your car. So if we put a black cloth over your windshield, then you don't have a way to see where you're actually going. That's all it is. Actually, technical analysis is exactly like that. So if you are in a demo account, you are actually in a car that doesn't actually move, you're just playing with the steering wheel and all that. So if you're in a live account, then you are in a real car on the highway with the black cloth out of the way from your windshield, and then you can actually see where you're actually going. So, and all the things that are inside your car, like a cockpit in the plane, is your indicators, things that you need to see whether or not you can go far enough. You know, your petrol tank, basically, it's like your equity level, you know, and then the alarm and all that is like your margin call, you know, and then you want to look at all other indicators to show that your functionality of your car is actually good enough to take you further. So that's basically it, as you know, just same as well. And then you got weather conditions that will impact your driving as well, visibility and everything else. And it's the same, like volatility in the market, all the events that are happening would actually then help you look at a clearer route to actually go the direction that you want to go, which is north or south, basically, in the trading world. Okay, so yeah, this is basically it. So here we have got, at this moment of time, I would expect a lot of movements this week, coming week, and we've got lots of trading opportunities as well, I would think. And I think this time around, compared to last week we didn't have loads of pairs and all that, but there were a lot of movements for specific pairs and instruments as well. So this time around, I think those pairs would actually expand. So you would have actually more movements. We've got movements as what has actually happened, but then also more pairs. So this is going to be good for us. And here, as you can actually see, it's talked a lot about gold, and then you've got dollar index right here. And this has been very consistent, whether it is on the daily FX or economic news as well. You can see that the pattern of how they have always correlated gold is always got to do with the US condition, US index, treasury yield, all these things. So we cannot run away from that connectivity, you see. So this is what happens out of the chart. We need to look at that connectivity in order for us to then confirm onto the technical charts whether or not the price is actually approaching certain level and all that. As I have mentioned before, exits are more important than entries. Okay, so that is basically it. So here, for example, in the market watch itself, we can see loads and loads of US stuff going on, right? They are questioning this and questioning that. Basically, it's got to do with policies and everything else. So with that, usually commodities would actually move with all these policies. So because there are loads of events happening that has got to do with policies and everything else, and then we have got lots of speeches, a lot of speeches by Biden himself, a lot of speeches by all the Feds, just to confirm what their political and economic stance is. And usually if that kind of event comes out a lot, then it would impact the policies, and the policies usually impact a lot of bonds, treasury yield, and number one, commodities, because all the commodities and everything else got to do with shares, stocks, Wall Street, and everything else would actually then start moving as well. Investors will start to think because investors, bigger investors, and we talk about investors as companies as well, hedge funds and all that, they usually listen very carefully with whatever that has happened in the policy side. Any policy change, treasury yield decisions, or anything like that in the States will actually be impacting what the investors do, and that basically usually rocks the market quite a lot. So here you can actually see we have got, we will talk about it tomorrow in detail on the week ahead, of course, but I just want to look at how busy would it actually be on the US side of it. As you can actually see, we do have data's out and in from Monday onwards on US. So if we just focus on US itself, you can actually see that we do have quite a busy schedule. Like almost every day of the week we have US data. So that does actually mean that the news media will start to rattle the market a lot with what they think and stuff like that. And then a lot of interviews will take place as well. So as you can see, we have the non-defense capital goods here, which is a very important one as well. And here we have it on Wednesday, and then we have the Jackson Hole Symposium, which is basically the number one speech that is going to determine a lot of things. Okay, so this is basically where trend would start to happen from Thursday onward for next week's trade. Okay, but then everything that is happening in the beginning of this week from tomorrow onwards until Wednesday would actually be just guessing and forecasting what would be spoken about in the symposium on Thursday. So the Thursday symposium is actually quite important for us because there's a lot of marination of news that investors are actually expecting as well. So they want to know, what the tone is, because they are using a method of understanding what the politicians and the economic superpowers, people who have control, the big boys, when they speak and they announce something live and all that, that's actually, they've got a group of analysts just analyzing what they say as well. So that's very important. So here you can see you've got the GDP as well. So GDP is one of the biggest data from a country that needs to be known. So that comes on the same day as the Jackson Hole Symposium. And then on Friday, we have got continuation, again, Jackson Hole Symposium. So I would think there will be, excuse me for that. a lot of movement, I would expect, in commodities especially. And that does cover gold a lot for this week. I think this week, in the middle of the week itself, that should actually start moving. And then we would have gold movement starting from maybe next week, or it will pick up slowly. And then it will actually come in with more and more demand from Asia, especially from India as well, because of the buying of gold, monsoon wedding situation, and that would all kick in terms of what is happening, because India also monitors a lot what happens in the US, because it impacts the dollar, and because it impacts the dollar, their trade relations with US is quite huge as well. So they've got a lot of trading relations, import export between India and the US on all areas, whether it's manufacturing, automobile, everything else. So that is actually quite a big part of India as well. And then together with the demand of Indians in India itself to be quite high with gold prices. So I see a lot happening actually. And also we also have the federal Powell speech on Friday itself. So what I see happening is that, yes, we will have some volatility, trading opportunities and all that. But for next week, I think whatever that's happening this week would actually decide a lot for next week onwards. So this is something that we will actually then see a lot of trading opportunities for sure starting from tomorrow. So yes, that's basically it, what's going on so far on the fundamental backdrop, basically. From my end. And here you can see, we've got a lot of focus on treasury yield. Also here, it's talking about the tapering condition. I forgot to mention that. Tapering is simply printing money from thin air, basically. This is what it means. They will use all kind of words, stimulus, tapering, various other words as well. They all mean the same thing. It's just pumping in more money by printing more money. And that basically reduces the value of the US dollar. Of course, we see the price goes up and all that, but then it's like pebbles or stones by the beach. When you have loads and loads of it, it becomes free. So the real value of the US dollar is only like toilet paper, actually. And this is the reality and the truth of it. But then, because it's already trapped a lot of countries, business people, investors globally with all kind of, what do you call that, dependent on the US dollar, like oil, for example, is traded in barrels in the US dollar and all that. So they have the power to actually do that. They are the only one country that has the Federal Reserve as a private institution, nothing to do with the government at all, basically working hand in hand with the government and commercial banks and private to actually run the country in a very, very unique way. And they are superpower number one, of course. Yes, we got China in there, but then China's situation, China's mechanics of politics is very different from the US. Basically, it's very complex, the one in the US. A lot of countries may want to copy, but the whole structure has nothing to do with any other country, and it's the most unique one available. So a lot of people think that Federal Reserve, with the word federal, like us in Malaysia or any other countries, and when we talk about federal, it is always government 100%. But in the US, Federal Reserve is a private institution. And basically, it's the central bank of America, and the central bank basically, or Fed, the Fed is private. Not only private, it has actually been built in 12 days only. It's been decided by all the big boys, JP Morgan, everybody else, going to a little island called Jekyll Island, and then they built the Federal Reserve. They decided to pump in money, build the Federal Reserve. So it's like a club more than a bank, but then it basically works in how it's working today. So that's basically it. And then we have got Bitcoin, Ethereum pushing towards fresh multi-week high. So we've got that correlation as well. Whenever these things happen where we have got all these movements being rippled out from the US first. So this is where it's happening. So it's causing all this ripple effect in commodities and various other things as well. So here in this section of commodities, Indices is here, US 30 stuff all under this side. As you can see, gold price rise. That's as of August 20th, 2 days ago. Then gold price drop here, 19 August. Oil price slides towards. So we've got loads of movements that are here. I expect much more for the week ahead. So now what we can actually do is to look at our current situation in gold prices from a technical standpoint. So here we're doing technical analysis to give us a little bit of an idea of what could actually happen. Now, here we have actually drawn a downward type pattern right here. May happen, may not happen, but what is happening right now as of Friday is the price have actually retrieved and reversed at the black box that we have actually mentioned for the past weeks. So past week as well, or last week, we've actually talked about how the price was actually somewhere here, and then it went somewhere here, sorry, and then it went and reversed, and it was expected to reverse in within this black box to actually come downwards. So whether or not it would actually come downwards all the way down here, you know, for the shortest period of time, we don't know that yet until it comes down and breaks out of this black box area. That basically means only after it goes under the 1764 area. Now, yes, we are expecting a lot of movement to the upside for gold. But then right now what is happening is that everything dropped. Oil dropped, everything dropped because of the demand section and various other fundamental stuff. But also because we need to be very, very careful with regards to what is going to happen in the symposium on Thursday. Also what is going to happen from tomorrow onwards on the yield, on the news. So we need to be very, very focused on news, number one, not technical from tomorrow onwards, because the one that is happening in the news is going to be very, very heavy for the US to actually then impact the dollar. The dollar will then decide for the gold what is to actually happen. So yes, I expect gold to go up, maybe not just yet. We need to see whether or not it wants to respect this area here as a support to go up earlier, or to actually come down, and so that it gives space for another 1 or 2 weeks for prices to come up from this area instead, so that all the investors, people in India, everywhere could actually buy gold cheaply. So if it comes down to this area, or just before this area, would actually be this area right here, which be total great price for support. Happened before in the past as well. A lot of big boys actually bought it exactly in that area. So my guess is for it to actually fall and heavy buying to actually start there. Because if I do a prediction in terms of by when that would actually fall, that would actually be by the end of the month as well. So this can actually work whereby we give it a space of 1 to 2 weeks for it to fall before it actually, boom, go back up again. So here, but before that, we also have other challenges. Basically here, it's a strong support area right here as well. I just want to highlight some support areas that should actually be also seen as an area that it might reverse as well, because what happens is that usually the retail traders are the one actually suffering, because when it goes down, it would reverse at certain area, and the reversal size of that reversal is what would actually take out the retail traders trade. So that is why the exit is really important, whether or not you decide to exit early at a loss, or you have sufficient capital to stay on and know that you don't care about the reversal, no matter how big that reversal is. That is your decision. That is why the exit is very, very important. So the exit does not only mean to exit and put TP, it actually also means to exit early at a loss as well. So that is when you exit, your exit strategy is really important. If I go on to the weekly chart, and on these levels itself, you can see that we let me just put it on monthly as well. We don't have much a referrals point anymore. You see, so much at the at the top. So these are all the data available on your MT4 at the moment. You can upload more data from before, but then it wouldn't make much of a difference because these ones here, as of now, it is still okay because the price hasn't really gone beyond this area anyway. Okay, so here, for example, we see gold's prices. It's a wait and see at this moment of time. For me personally, I see that it needs to go under 1764, this black box area, in order for us to then see whether or not this is what it wants to do, you know, to actually just drop in price to offer a cheaper buy price at a later stage to investors and traders or not. So this is really crucial of what would actually happen from tomorrow onwards with news, with everything fundamental first, not technical. So be very careful. Don't look at technical only tomorrow and then just see that the candles are down and then you just want to go in and you go in aggressively. Don't base on technical only tomorrow onwards because it's going to be very, very fundamentally and news driven. A lot of heavy data, not only heavy data, heavy decisions from the US, heavy decisions. Okay, so this would actually be a global type decision that would actually impact commodities as a whole. So please don't actually do a lot of risky decisions with only EA, only technical. Just marry them up as much as you can, so you can actually get a better, more balanced approach in trading the market from tomorrow onwards. If not, we'll get a lot of shock in the market, and then we will see that, you know, the technical indicators wouldn't actually be functioning too accurately in very, very big movements, because, you know, the media is going to spin a lot of speeches, and there's a lot of speeches, a lot of interviews on CNBC, Bloomberg, and all that, because investors and traders, they just want to know a lot of decisions, you know, what they want to predict and forecast the decisions from the US, from Biden and all that onto the news media. And this is what's happening right now, is that they want to have a talk amongst all the experts and all that on media, and the media like Bloomberg, CNBC, CNN, they want to stir up this whole situation by interviewing them live, 5 minutes talk and all that. But that is what's going to be moving the market. So if we have a lot of expectation of things going on in the news, stirred by all the other things, then it's going to impact the price, and it's going to impact a lot of technical traders, you see. So it's best to actually look at the chart, still look at the chart, a lot of the chart, but then balance it up with fundamental as well. But most importantly, to look at the price action, candles on the left, all the resistance and support level on the left as well is very, very important. So here we have got, see, in this area, we've got a thinking area, sideways movement of a lot of candles going sideways, little ones. And then we've got another one here. So then this area has actually built sort of a support wall as well. So that is why that box has actually been built up, to just give you a little bit of an indication that price needs to fall based on this selling zone of this selling candle here, as well as this selling candle right here, to give us the confirmation that we will have more sell to break out, and then the market wants to pull down the price of gold or not. So once it goes beyond and go under this support, all this support area here, under this box basically, then we have got a better chance to actually write a little bit of a sell first, okay? And then once we write the sell and write the sell, then we can actually write the movements, big movements, to go upwards when the market is ready, the big boys are ready as well. Then we will be riding the trend as well. Okay, sorry about that, guys. My voice is losing as I speak now. Okay, So this is gold right here. And oil, as we can see, it has actually gone crazily to the downside. Of course, for us retail traders, CFDs, we're trading CFDs, right? So we can actually sell, and because we predicted loads of movement to the downside, so we may have profited from the selling. And this has basically been good for us as CFDs traders on the MT4 and MT5. Now, when it comes to price action, this is US oil. With regards to price action itself, when we look to the left, we've got an area to actually be concerned of or be aware of, just so that we know whether or not when tomorrow comes, will it actually mirror this bounce of price to the upside based on this movement right here. Okay, so as it gone up or will go up or not, would actually then give us a little bit of news that might come to support this area. So sometimes the news comes later, sometimes the news comes earlier. So, but then the window of the market is your technical. So that's why I said that we can actually see the potential prediction of what could potentially happen. What could potentially happen is a reversal. Why? Because on the left, we have got this very, very significant support area. Now we've got the blue line between $61.89 to $61.50 to actually be the area of support as of tomorrow. So the price as of Friday closed at 61.78, right? So $61.78 it closed, and it's got some room to go downwards to 61.50. Now, if at all it is going to be looking like it wants to drop a little bit more, there's definitely some candles to actually support it, and it could drop down to this area. It could also drop down to this area right here. It could also drop down. Maximum it can actually drop down is 57.44. Okay, and also before that it can actually also rise around here, which is 58.50, which is exactly at the 58.50 area, the psychological level as well. So yes, we've got lots of support area, as you can see. The good thing as well is that we can trade the oil, both Brent and US oil, based on psychological numbers, like we trade currencies, which is great. It's been performing really well with entries and exits using the psychological numbers. So in other words, from where the price is right now, it's not ideal price to sell or to buy, but in order for us to buy, we need to actually see a reversal first. So let's not talk about buy yet, mainly because the strength of it is looking like still it may want to come down, but with a risk that it might reverse here. So if it does actually reverse and then give us some opportunity to buy, then we can actually have a little bit of a buy section, I would think, either up there. Let me just put it as a red area, or cautiously for it to actually be around here as a potential resistance here as well. Okay, as it goes up. So short term, basically, we have got, let's say it wants to go up. Yes, it can actually go up, but our buy price should actually be at 61.90 onwards. So now it's a little bit too early to see what exactly could actually happen. It's probably best until tomorrow to see whether or not it reverses. So if it does actually reverse, respect that area of support and start to have a reversal to the upside, then you can start buying at 61.90 or 62.10. Okay, so 62.10 you can actually buy, or you want to buy earlier, 61.90. That is your buy price, but make sure you exit at 62.35. Okay, a bit earlier. Usually it's 62.40, but it's already given you that red line right here So you need to respect that candle, mother candle right there, where it actually opened at that area right there. So that opening price of a what do you call that? Resistant area right there could also be reverse, basically. Any resistance right there can become support, support can become support, or it could actually mirror that area right there. So here, for example, 62. So if you buy at 61.90 or 62.10, you exit at 62.35. That is your shortest period for now. Let's just have one trade idea for US oil, just in case, just monitoring. You can do a pending order as of market opens tomorrow, but it's good for us to monitor first and see what exactly the market wants to do tomorrow for US oil. Now, UK oil. UK oil, almost the same. It's actually gone under this support area, gone under this, what do you call that? Closing price of this mother candle as well. So that shows me that for UK oil especially, it might want to go lower because it didn't actually show any price of reversal here. This is a daily chart for UK oil. Didn't show any flinching or reversal at all here. It went under it. So because it went under it, we still need to be actually careful, but in my guess, it might want to, sort of mirror this movement of this largest candle right here, largest bearish candle. So it might want to come downwards, maybe not exactly there at the closing price of that mother candle, but I'll take this here, reversal at this mother candle of this bullish candle instead right here, but I'll push this one up a little bit to this color, like right here, just in case. There you go, this one here. So there is a sort of reversal potential at this area at 62.91 area. So there, but it's a little bit different than US oil. US oil is showing that the reversal is very, very close, right? It's right at the reversal support area right now as it closes on Friday. But for UK oil, it shows like it wants to drop first a little bit more than US oil. US oil wants to reverse now, most probably wants to reverse for now or the shortest term. But for UK oil, it wants to drop more down to the downside. So more selling opportunity for the UK oil. So UK oil, it looks like if at all it actually drops, it might, do the reversal at this mother candle right here, as you can see. And that reversal is at 63.76. So it might actually be better for us to, if you are actually already selling at and now or selling already, you can sell on the spot quickly as well because it's already 64.70 area. It's already gone under the 64.80 area psychological level. So you can actually sell already once the market opens, but then make sure you exit at 63.90. I would think it's probably better. Okay, just in case, because of the potential right there of a reversal. 63.90, which is also here. Yeah, I think it's probably better. Or for those who wants to be a little bit safer, perhaps you want to take profit at your 63.95 as 96, 63.96 at least. Yeah, just to take into consideration that pin bar right there, as well as this closing price of this mother candle bearish right here. So yes, there's some selling opportunity, a little bit more for UK oil than US oil. So this might come down and you can actually exit at 63.96. So your entry, I'm not really concerned of. The trend here is suggested to be to the downside. There's some selling opportunity, I think. So the exit is at 63.96. Okay, so you can exit at 63.96. So you can enter at any moment of time that you wish for the sell, and then and use your indicators as well and various other mixes, and then you can actually exit 63.96. Okay, that's for UK oil. All right, so there you go. We've talked a little bit about gold, we've talked about US oil, we've talked about UK oil as well. Any questions so far? Any questions? Okay, so in tomorrow's week ahead, I think there will be a lot of ideas to share, trade signals as well. So yes, correct. Yeah. For gold, if it exits that box to the downside, then we have got more confirmation of sell trend, correct? If not, then we might be taken for a ride for more sideways and sideways before it breaks out to this level for the upward movement or trend. So it's a long way to break all that to go up, and then we ride along a more steady trend to the upside. But here, what's most likely to happen is for it to actually drop down and break out this to give us more confirmation that it wants to go lower. Okay, that's for gold. There's more selling here between 1760.38 to 1735.85. So this area here would actually be an area that I could sell once it triggered this area. There you go. That's your sell area, which is much better. Pending order could actually be set up there 1760.38. So 1760.38, you can sell, take profit 1735.85. Okay. It's a not too bad an area as well. It's got a lot of power, I would think, because you have that candle right there, that mother candle that supports that area, and also you have got previous candle that is bullish as well. That is here, that area. So same length candle, same type power as well on the bullish side, and also the bearish side. That shows that, you know, you have got interest in this area. This area has power of buy or sell depending on who dominates at the time. So because it has come down here, went up, what is due is for it to come down again into this area, this zone. This is for gold. Okay, so if we pull this away and away, you can see that here it was another bearish mother candle, single bearish mother candle going through the same area as well. So it's like a pattern. So here, pattern of decisions actually. So there we go. We got another one here. Okay. So that sell area, yeah, that's the candle there. So I will change this one here to red. It marks selling at that area for gold. Okay, there, and you'll buy, you'll take profit. I'll change it to green actually. There you go. So red and green. Okay, so So there you go. If I pull it a little bit more, let's see. Maybe higher time frame. Red line and green line, you can see, it was an up there, down here, up, down, up. So now it's down is due in that area. So in this area, we are expecting another bearish movement, whether it is many candles down, bearish candle down, or a single bearish candle down, mirroring this one here and also mirroring previous ones there. Okay, so this area, when you have an area or a zone like this that has got a single candle gone up through it and a single candle come down through it, that basically shows a lot of preference of heavy, big orders going in by big boys, basically, like this one here, boom. Okay, so here down, very big candle, single candle, but another single candle down. So this is all dominated by sellers here. Big sellers drop the price right there. Okay, and again, one more here. So here we don't see a lot of bullish candle in this area. That is why it has dropped the price there. You see, so again, now we are seeing more bearish candle at this area. So as soon as it comes down into this area on a sell, then we have got more possibility for it to pull down price and go down even more. Okay, so it's just a reflection of what has happened here as well. Okay, so yeah, that's basically it this moment in time. Okay, all right, guys, any questions? All good so far? All good, yeah? You guys okay? Okay, perfect. Okay, if that's it, then we will end the session for today so that you guys can enjoy the rest of the Sunday. I'm off to the beach again, but I'm working by the beach, analyzing the market a little bit more on the technical side of it as well. And then I can share that with you guys tomorrow. And tomorrow we'll see more opportunities discussed for the whole week in our Bretton's Week Ahead webinar. Okay, guys, take care. Thank you very much, Alfred. You take care as well. Have a great Sunday, rest of the Sunday, and we'll see you guys tomorrow in tomorrow's session. Take care. Bye-bye. Thank you.